Hello guys, how are you guys doing? Okay, welcome back to my streaming, and today we are going to be looking at, so far we have talked about a lot of things, and we started from looking at what market structure is, after which we looking at what market structure is, after which um we entered into what we looked at what market structure is, both basic and advanced market structure, right? Then after that we moved to liquidity. We talked about liquidity, um what liquidity is all about, how to spot liquidity and all that. Then after which we entered into other blocks. We looked into different types of other blocks, where we talked about range as another block, week as another block, breaker blocks, and QMR and the rest of them, right? Then after which we now dived into entries. Okay, so we've talked about type of entries. We have our type A entry, type B entry, and type C entry. Okay, that's the three types of entry that we will be using to do the whole trading process, right? So we stopped at entries, and we just looked at entries in details, like as you can see here. We looked at entry in details, and then how you can actually go about entries, right? We also talked about premium and discount zones and a lot. Okay, so I believe we just did the textbook examples of entries, right? We just looked at textbook examples of entries. We didn't even do any live examples, apart from the fact that we just spotted these trades here. Okay, just spotted these trades here, and that was basically the whole stuff that we did. So we'll be looking at entries, right? Like chart work. We'll be looking at chart, how to find these entries in the chart, okay, and how to go about the whole trading, okay, like putting it all together. Then we also be talking about top down analysis. So I would love to start with this, that top down analysis is a process you take. Okay, is a process where you take in order to find an entry. Okay, once you come to the market, like once day breaks, as a trader, once day breaks and you come to the market, what you have in mind is to find a trade and make something out of the trade. Okay, so you are just here to spot trades, because that's what you do. You buy and sell um you buy and sell um prices. Okay, you buy and sell prices. So you just come, what you do is to look for an entry, okay, to find a way to buy or sell the price. Now the process of doing that is what we call top down analysis. I don't know if you are getting it. The process of doing that is what we call top down analysis, okay, whereby you switch from time frame to time frame to time frame to time frame till you get to your entry time frame, right? Okay, so now let me delete all of this so that we have a very clean chart to work with. Okay, yeah, now we have a very clean chart to work with. I don't know why everything is not showing yet. Okay, network is bad on my end, but then that is not going to stop us from anything. Now when we talk about top down analysis, it's just is a very simple stuff, whereby you just go from time frame to time frame, time frame to time frame. Okay, you are just switching time frame to time frame, whereby first of all you go to a higher time frame to get um the 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 bigger picture of what the market is doing. Okay, then you step to the other time frame to, like, you are just looking for details. They are just looking for details in the market. All right, so that I'm sorry, so that you will end up getting an entry, okay, to work with, right? Yeah. So but first of all, we have to look at entries, like I said, we are going to be looking at chat works, okay, to better understand entries and how to go about it before we now um dive into top down analysis, right? Okay, so for the entries, I think I should combine the whole stuff whereby with the top down analysis, then we now, because top down analysis is just the process of getting the trades, and if you now get a trade, you now then look at the entries and then talk about it in details. I think that's a better way to go about the whole stuff, so that we have man, I fucked up. Okay, right. Oh, it's still okay. We have network back, yes. Okay, so now when we talk about top down analysis, okay, first of all, what we are supposed to look at is time frames. Okay, let's talk about time frames first, then we now dive into it. So we have directional time frame. Okay, we have what we call directional time frame, which is a time frame that you use to seek out for direction. Okay, so you either do that with weekly or daily time frame. Okay, weekly or daily time frame. Weekly, which is W, and daily time frame. Okay, this is the time frames we use for our direction, okay, to get our directional bias. Now we now have a second time frame, which is the 4-hour time frame, which we use to observe what the direction is actually which we use for getting more details about a particular direction that we are seeing on the higher time frame. Okay, like when we start looking into the chart, you have a better understanding. So the H4, we have the 4-hour time frame as our second time frame, alpha our directional time frame. Okay, so the 4-hour time frame is also serving as a directional time frame, but is going to be giving us like a more clearer picture to work with. Okay, when we get into the chart, you understand better, but just follow me, okay, so that you understand the concept before diving into the chart. Because if you don't understand the concept, how the stuff works, like when we get to the chart, you'll be a lot more confused. So now let's just continue with the theory part of things. The 4-hour time frame is more like a directional time frame, but it gives you a clearer picture. Okay, you get a particular thing in the weekly or daily time frame, depending on the one you prefer the most. Okay, the two of them are good. Like, okay, let me just do the cams and talk about what I want to talk about before I just divert. So now, looking at this guy as your directional time frame, okay, you have a particular direction. Remember when we were talking about market structure, okay, you have a particular direction. Remember, in the next time frame is going to be something like this, right? Now when you are looking at the daily time frame, you can't just work with just this one move here, like this one move. You need more details, right? So 4-hour is working as the time frame that will give you more details, right, about what this directional time frame is talking about. Okay, so this is your direction. You know that the market is in two phases, right? The market is in two phases: the correction phase, or what we call the correction phase, right, or the continuation phase. Let's say, for instance, you have a downtrend. Okay, you have your continuation phase and your correction phase, or your pullback, okay, or your retracement, whatever it is that you want to call it. Your correction, your pullback, your retracement, then your continuation. Okay, your pullback phase, your continuation, right? So now you use the daily time frame or the weekly time frame to determine which phase the market is as of the moment you are looking at your chart. So when you get that direction of where the market is, like which phase the market is, right, assuming that the market is done with the pullback and is moving to the downside, like is continuing to move to the downside because the market is in downtrend obviously, right. This is the time frame you are using to determine that, okay, the market is in a correction phase. Now for you to get more details about this continuation the market is doing, right, that's where the 4 hour comes in. Okay, so the 4 hour is kind of an intermediate time frame between the daily time frame and then the next other time frame we are going to be talking about, right. Okay, now we now have the 1 hour time frame. Okay, after that we now have about the 1 hour time frame. 1h, right, 1h, or sorry, okay, 1h, or 30 minutes, 30 minutes, or 15 minutes. Okay, so these are the last time frames we'll be looking at. Okay, we have our weekly time frame, okay, or daily time frame. We have our 4 hour time frame as our intermediate. Then we have our 1 hour time frame. So these time frames now, these 3 time frames that I mentioned now is for entries. Okay, if you get your direction, you get your intermediate time frame and see what the market is doing. Now you now start looking for entries, which you do in the 1 hour time frame, 30 minutes time frame, or 15 minutes time frame, depending on what the chart is giving, right, depending on what the chart is giving. So it will not determine the particular time frame that you use. But for starters, right, I will love you to focus on the 1 hour. Okay, focus on the 1 hour time frame and leave these 2 other time frames. Why? Because less is more, like they say, less is more. Like the more you go to lower time frames, the more, let me not say confused, but the more that the more complicated things are likely going to be for you if you are not that good to an extent, right. They are not that good to an extent, not that they are not good for entries, just that most of the times, like the higher time frame, okay, let me put it like this, the higher time frame always controls the lower time frame, right. The higher time frame always controls the lower time frame. Why? Because whatever it is that you are seeing in the 1 hour time frame is going to be more stronger than whatever it is that you are going to see in the 30 minutes or in the 15 minutes. So that's why it's important to just stick to 1 hour for now, unless things are not that clear on the 1 hour time frame. Then you are now permitted to switch either on the 30 minutes time frame or the 15 minutes time frame. Well, when we get to the chart, you'll be seeing more examples to better understand this stuff. So these are the 3 time frames, like the 3 major time frames we'll be using for our top down analysis, right. We look for our directional time. We have our directional time frame, which is weekly or daily. Sometimes you can switch to monthly, right. You can switch to monthly. So this for our directional bias, right. These are directional bias. Then we now have our intermediate time frame, which is 4 hour, to get a more clearer picture. Then we have our entry time frame, which is these guys, our entry time frame, right. So let me put it into writing. So these guys are our directional TF time frame. Okay, so these guys are directional time frame. Yes. So the color. So these guys are directional time frame. Let's remove this guy and this guy and this guy. Okay, bring this guy here. Okay, these guys are directional time frame, right? Now let's shoot this guy here. Shoot this guy here. Yeah, so this one is our intermediate time frame. Okay, intermediate time frame. Intermediate time frame. So this guy to this guy. Okay. So all these time frames are very, very important. One can't do without the other. One can't do without the other. This one is for entries. Right? All of them are helping each other. One can't do without another. So you can screenshot this. Alright, you can screenshot this so that you don't get confused. Okay, so now this being said, so whenever I talk about higher time frames, okay, so this is the order this guy is going. Is going from a higher, you are going from higher time frame to the lower time frame, right? Higher time frame to the lower time frame. This is how the order is. So you are going from higher time frame, which is, okay, let me higher TF, right? You are going from a higher time frame to the lower time frame. So we don't want to go lower than this. Right? We don't want to go lower than this. Okay? Anything lower than this is just noise. Anything lower than this, these guys, is just noise. Okay? So we start from the higher time frame to the lower time frame. So this is our top-down analysis process. Like, this is what you are going to be doing. Okay, yeah, so let's put this into practice. Like, all this blah 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 we have been saying, let's see how it works on the time frame. So remember, we are going from the higher time frame to the lower time frame, and our higher time frame, we want what are we looking for in the higher time frame? For direction. Okay, one, let me call your attention to this one. If you don't get the direction of the market, whatever it is you are, like, if you don't do this guy very well, whatever it is you are going to be doing here is going to end you up either in loss. Then if you eventually get a win, that means you are just lucky. Okay, so you are just gambling, and we don't want to do that. So that's why I said all this time frame work hand in hand. If you get this guy right, you are likely going to get this guy right. Okay, so if you get this guy right, you are likely going to, like, every other thing is going to fall in place. If you get this guy right and get this guy right, all these ones are likely going to fall in place. Okay, but then you need to get all of them right for it to work perfectly, right? Okay, so let's go to the chart. Now, when you come to the chart, or when you come to the market, what do you first do? You go for your directional time frame. Okay, you go to your directional time frame and see what the market is doing. Okay, so are you seeing the market is just bullish, right? Break of structure, like, it's just bullish, so it's obvious that the market is bullish, right? So that's our first. So market is going to the upside. Nice. Now we zoom into the recent price action, what the market is doing currently. Okay, so where is your last break of structure? That's what you are going to ask yourself. Okay, so now what you want to look out for here is which phase the market is at. Is it in a pullback phase? Okay, or is it in a continuation phase like this? Okay, so now when you ask yourself these two questions, okay, that's going to be your first thing you are going to ask yourself. You've gotten your break of structure here, right? You've gotten a break of structure here or anywhere above there. So market is pulling back. So next thing you are going to ask yourself, where is market pulling back to? Where is market pulling back to? Okay, where is market pulling back to? That's the second question you are going to ask yourself. So if you can identify where the market is pulling back to, which is this guy somewhere inside there, okay, something inside there, which is this guy, that means you know where the market is going to, and you know where you are going to be following the market to. So the market was pulling back to this area here, this other block here. Okay, so assuming all these things has not happened, once market broke structure here, what are we going to be looking at for is that pullback to this zone here, right? So you are going to be selling to this zone. So once market hit this zone, what are you expecting? The market is done with the pullback phase, it is about to start correcting, right? So what are we going to be looking at for buys? Okay, so you are going to be looking out for buys. So are you seeing this where you get your direction and what you want to do in the market, right? Perfect. So now the market has tested here, and we know that market is done pulling back because both the premium and discount zone, the market is already in a premium zone, sorry, in a discount zone, right? The market is already in a premium in a discount zone. So all the things we have in place is saying market is ready to buy. Okay, market is ready to buy. The other block here held very perfectly, and we are in a discount zone, so we are safe to buy, right? Okay, and we also see that we are done with our pullback, that we are correct, we are going for the correction. So this is what you do on the higher time frame here, right? So let's delete all of this, right? Okay, let's leave the break of structure. Now what do? We step to the daily time frame. Okay, so the daily time frame and this guy is just for the direction, right? Okay, it's either you go to the daily time frame or you go to, so I love the weekly time frame. So what you'll be doing is you can switch either to the weekly to get a bigger picture of things, and then to get a micro picture of things, right? So here you can see that why market is reacting from this other block is because this low here, I see that the daily time frame is giving you a better picture. This low here was a strong low. Why? Because it broke structure, like it swept liquidity here, so it's a strong low. I see it. So that's why this other block here is holding. Are you getting it? That's why this other block here is holding. I see that detail that we saw here was not on the weekly time frame, right? So are you seeing this for the direction, and this is how you switch from time frame to time frame. So you go back to the time frame and you are seeing more better details here, right? Now since we know that market is done pulling back, right? Is done pulling back. So what do you expect from our market structure video? After a pullback, you expect a correction, right? So how do you expect your correction? Market must break 2 times. Okay, market must break 2 times to confirm that the market is already changing direction. So what do? We have seen what we want here. Okay, we have gotten the details we want on this time frame, so we move to the next time frame lower, which is our 4-hour time frame. So now what are we going to be doing on the 4-hour time frame? Watch, we'll be looking out for a break of structure to the direction that we want markets to be going, that we are anticipating markets to go. Are you getting it? We want a break of structure to the direction we want markets to go. So assuming we are in an uptrend, okay, and this is the daily time frame or the weekly time frame. So on the 4-hour we are expecting market to continue the continuation phase. So on the 4-hour we are expecting markets to break to that direction, okay, so that we can start making trade decisions, right? So here we are looking out for the break, okay, to confirm that market is done with this pullback phase that is now continuing going to the upside. And here it is, we got that confirmation here, right? As you can see, this is an internal structure. So market broke this guy, which is our first indication that the market is about to do something different, right? And this is what the 1 hour is for. So you have gotten that first indication, you have gotten the second indication here, right? So obviously the market is already bullish. Okay, so what do you do again on this 4 hour time frame? On this 4 hour time frame, I'm sorry. So what else do you do on this 4 hour time frame, right? What else do you do on this 4 hour time frame? These are the questions you are going to be asking yourself. What else are you going to do? Since you have gotten double break of structure here, so you have confirmed that the market is already bullish. Now what do you want to do? Where are we going to be buying from? Okay, let's take for instance this guy. Let's say that this guy has not pulled back yet, that you have gotten your first break, you have gotten your first break and your second break. So what are you going to do when this guy has not pulled back yet? So the big question you are going to ask yourself is, where is your premium and discount zone, and where is market coming back to? So you mark out from this low to this high. Why are you marking out from this low to this high? Because market breaking this first low here does not mean that the market is changing direction. So market need to break this guy and this guy, double break of structure. Yeah, I even remember something now. Okay, another way to confirm that the market has changed trend, if not giving you something like this to confirm that the trend has changed. If market breaks, like we are in a downtrend, so if market does something like this, we are in a downtrend. If market breaks these two highs, you have changed trend automatically. Like you don't need to wait for the second break of structure. Okay, you just know that you have changed trend already. Like you can start buying. If market pull back to here, you can start buying. Okay, but so you can start buying from like this first pullback, or you can wait for the second break of structure for a stronger confirmation to start buying from this low, right? So that's it. So if market gives you like breaks too high or too lows, okay, let's take for the downside of things. Market was coming to the downside, sorry, I'm still repeating. So market was going to the upside, right? And market breaks this too low on a go. Okay, so we are already changed, like this guy is already change of trend this up, so we are expecting market to continue going to the downside, right? So that's it. So if you get a double break of a double break of a high or a low, it also indicates a change of trend. So in this case we are anticipating market for us to confirm that this market is still going to be selling to the downside. This low and this low must be broken like this. You can say okay, market is still going to the downside, but we are going to be marking out from this low to this high. Why? Because we are expecting this guy to hold, okay, and not to break, because if market breaks here, it has tendencies of still going to the upside, okay, and you know that we are bullish, so that's why. Okay, so you mark out those two structures. You mark out those two structures, right? That high and that low, okay, as this high and this low. Okay, so now when you mark out those two highs and lows, okay, what are we now going to be doing? We now go to the 1 hour time frame, okay, because things are not really obvious here. we go to the 1 hour time frame, okay, because we have gotten our sense of direction. That means we are now going to the upside, so we want to start trading to the upside, so we go to the 1 hour time frame, which is our entry time frame. Okay, so you can either check out for if this low here is a strong low, this low here is a strong low on the 1 hour. Okay, if this guy is a strong low, that means it's safe for you to buy directly from this low. If this guy is a strong low, it's safe for you to look for another block here and place your buy directly here. Okay, knowing that since this place is a strong low, here is already your inducement. Okay, this second break of structure is already your inducement, so you expect market to take it out, right? Okay, so that's the first scenario you can do. Okay, so or you can just wait without buying aggressively. You can just wait for confirmation for markets to still do the same thing that it did on the weekly and daily time frame. Okay, so you still wait for markets to change direction here, okay, to switch that time frame. So if market switches, you can still go to the, like, now that's when you can now go to your 15 minutes. Are you seeing how these time frames are important? As you can see here in the 15 minutes, the market broke, gave you a sweep, right? Broke first structure, which is this guy, broke second structure, and here is now a valid place for you to buy. Are you see now? Are you see how what market did there? And now market is already going to the upside. So like this week while trading, I was expecting markets to react from this guy. Why? Because we are already bullish. Okay, we are already bullish. So now, okay, let me not rush. So let's go back to our 1 hour time frame. I see. So once market switch to the other side of things, like to the direction market, like to the overall direction the market is heading to, which is being bullish. So once market changes bullish on this 1 hour time frame, so this is where the entry starts coming in now. Are you getting it? So you now start looking for entries like towards the direction the market is moving to. You now start looking out for entries. So you can now go to the 15 minutes or stick to 1 hour. If 1 hour is giving you, if market is giving you entry on the 1 hour, okay, so go to 15 minutes for clearer picture. So as you can see, when this was our first entry here, why? Because it had sweep, double break of structure and liquidity here. So this was our first entry. So this is our first entry. Okay, our target was this high, right? First entry. Now what do? You look for second entry, right? What else are you looking at for? These three types of entry: either entry type A, entry type B, or entry type C. Okay, so this we are seeing a possible entry type A here, and this liquidity here is kind of far. Okay, this was a liquidity here. Let me remove this guy, and this was your first break of structure. So what are you seeing already? A type of entry, right? So what we do, we mark out another block here. So when marking out other block, you know how to do it now. You can go to you go to the higher time frame when you want to mark another block. You go to the higher time frame and check out for the best other block there. As you can see, let me move this guy. As you can see our other block here, this red candle. So you can refine it to that guy, or you can, to be safer, you can go to the 4 hour and still collect another block. Okay, so are you seeing that this guy is another block here? Okay, but you can just, depends on what you want and what you have back tested and what is already working for you, right? So you can decide to pick any time frame, but me, I prefer 1 hour other block. Okay, if I get a 1 hour other block, like, I'm always glad and I stick to it. Most of the time 30 minutes other block works perfectly, right? Okay, So this was our second entry anticipation. So you just spot your entry, just place an order. So in subsequent classes we'll be talking about how to place order for people that don't know how to place order using gate.io platform. Okay, yeah, sorry. Okay, so you'll be targeting this same high as the first guy. Okay, this is our first TP. Now market did not pull back here. Market did not pull back to this entry and gave you another break of structure. So what are we now seeing again? As market gave us a new break of structure. So we delete this guy. Market gave us a new break of structure. What are we seeing? A strong glow here, right? A strong glow here. If you want to see it better, you go to the 15 minutes. So I see that these three time frames are like they are working with each other. I see the sweep, they are very clear. It has a sweep and it has an inducement here. Okay, it has an inducement. So what are we expecting? We expected markets to sweep this inducement and tap into this other block. So when picking another block, are you seeing how I'm putting in the entries? Sorry, are you seeing how I'm looking out for the entries? So this is what you are going to be doing, but you are going to be careful. So to be on the safer side, you can just mark out this range, this high. This is the 4-hour range you are working with. So this high and this low, right? This is the range you are working with. So we want markets to come into the discount. So you mark out your discount zone and your premium zone, right? So you want markets to come. Let me change the color of this guy so that it won't be confusing. Hey, sorry. No. Right, sharp. Okay, now this to indicate the premium. Okay, so we are looking at from this note. So this is the premium and discount zone we are looking at from this high to this, from this high to this low, right? So market came to the discount zone. Okay, market came to the discount zone and started buying. I see you just switch buyers ASAP. Just switch buyers, like you just start looking for entry. So you know that if market gets to this point, get to this high, like buy probabilities becomes like the buys becomes lesser of like they become less of a high probability, right? Okay, so I hope you understand what you are doing. So let me just remove all of these guys. But these are the things you have to be putting in place. Okay, so now market didn't get to that point again, and so this was the third entry that we spotted here. And what the market do? Market, so we are targeting this high, yeah. So market did not tap it and continue moving to the upside. So are you seeing how noisy this? If you assume you move to the 1 minute, assume you move to the 1 minute time frame. Say you move to the 1 minute time frame. I see how noisy it is, like so crazy. I see. Like break, like it's crazy. I see. So that's why you just avoid that guy and go to a higher time frame to get a nice view of things, right? So let's clean all of that. Yeah. Okay, so let's put back our buy two. So this was what we expected, and market just boom, still went to the upside without and leaving us behind without tapping us in. But remember, we've gotten a first entry here, like we had the first buy here. I see. So once market gives you, once you get your direction, are you seeing that every other thing is just as simple as ABCD? Every other thing is as simple as ABCD. Just get your direction right, okay, and you will see that other things will be falling in place. So what are we now waiting for again? We go back to our 1 hour time frame to get a bigger picture of things and where market is headed to. So market is going to this high, is coming for this high, because it has completed a pullback phase and it's giving us continuations. So we are trading the continuation right now. The market is going sideways because the market is not that volatile, because we are in the weekend, okay, so that's why it's not that volatile. So once market opens, it's likely going to come for this high and take it out, okay. So we are no more interested in this guy if this guy breaks structure. So if market breaks this guy, if market breaks that guy, we are no more interested. Why? Because our interest was market doing something like this, taking out this inducement before breaking this guy, okay, but it has already broken structure. In some cases, right, in some cases you can see things like this work out. Sorry, you can see this guy, it can be a liquidity, okay, for this guy to buy, for market to still come back to this guy to buy it before going to the upside. But for me, I'm sorry, but for me, once market takes out that high, I'm no more interested, okay, or unless in rare cases that I'm seeing things that that have a strong belief that this guy is a buy, like he's going to buy, and I have a very very strong belief that he's going to buy. That's when I now or I'm seeing other things in the chart that is likely going to make market to come back to that entry point and continue buying, okay. That's when I consider buying from, like, that's when I consider leaving my entry there, okay, without taking it out. But once market breaks this high, just delete this order, alright, just delete this order, so you just delete it, okay. So for now, market is coming for this high, right, okay. So let's see for let's go back in time and test for other, like for other prices that market has already printed, okay. So now there's another thing I want to bring to your attention. When it comes to the 4 hour, right, when it comes to the 4 hour, it's not more that you have a double break like this for you to mark out the high and the low, right. So most of the times, this leg, you can just wait for this leg, okay. You just first of all wait for how I do it. I wait for this low, right, because this low, there is a low here, so I wait for this low, mark out my premium and discount like this, right, then wait for this low to see what this low is about to do. If there is not a strong low here, if there is a strong low here, that means this guy is automatically liquidity. I'm not even anticipating anything from this guy if there is a strong low here. But if there is no strong low here, I'm going to be anticipating markets to just pull back to this discount zone, change direction here, then we start buying, right, because it's not every time market is going to sweep liquidity unless there is a strong low here. Even if there is a strong low here, most of the time market is not perfect, market can just decide to buy from here, right. So that's why your first lookout for entry is this 4 hour low here, right. This 4 hour low, if you get this thing on the 1 hour or the 15 minutes, you can start buying. But if that's not the case, you now wait out for this second low, right. Wait out for this second low to see if this second low is going to hold, right. So this second low, you have to make sure that it's a strong low, like it's a strong low before you consider before you consider making any trade decision from here, right? Before you consider making any trade decision from here, because once market take this guy, is likely going to, once market take out this low, it's likely going to continue going to the downside, or it can still continue going to the upside, depending on what this low is giving, right? Depending on what this low is giving. That's the tip I want to give. So are you seeing that all the concepts we talked about here, we are already applying it here, right? So now let's look at, okay, let's go to the weekly time frame and study this leg here. Let me clean all of this, it's getting messy. Let me clean all of that, it's getting messy. Now watch. Remember, we want to study this after this break of structure here. We had a pullback phase here, so we want to look at this pullback phase and what it was like when it was happening. So you go to the daily time frame. What are we looking at for the daily time frame? Okay, so it comes to the daily time frame. So the daily time frame and the weekly time frame is giving us the same thing, so we move to forward to get a clearer picture of what is happening. Okay, so here on the 4 hour time frame, what are we expecting? A change of trend there, right? And what can you see? Markets just broke this guy. So are you seeing, it just broke double break of structure here. It just did a double break of structure and continue going to the downside ASAP without repercussion, right? Okay, so now how do we go about this guy if we are in a live market, right? So once you have gotten this break of structure here, what do? We mark out our premium and discount zones, right? So we mark out our high to our low. Okay, and what are we expecting? For markets to pull back into this place and continue selling to the downside. Okay, so this is the only thing we do on the 4 hour time frame. Look out for break of structure and then wait for a pullback. Okay, so what do we do now? We mark out this highest point so that if you go to the lower time frame, we don't get confused of where we are looking at, and mark out the pullback that low there, because this is the high and this is the low of this movement, right? For you to understand better, this is the break of structure here. So this is the high and this is the low, right? So remember, when we were talking about continuation and pullback phases, we say we only want to focus on continuations. Why? Because it presents the higher opportunity, like it presents higher probability opportunities for us in the market than the pullback phases, right? That's good. So what do we do? Since we marked out that high and that low, we now go to the 1 hour time frame to look for entries. So this is just very, very simple. Top down analysis is very simple. So what are we doing? What are we waiting for here? What are we expecting here? We are waiting for a switch to the overall direction of the market, right? A switch to the overall direction. So let's remove this guy since we have gotten our high and our low. So, and you can see that, okay, let's put back this guy. So and you can see, what are you see here? The market has moved to the the premium zone. So what are we expecting? Sales, right? So what we patiently wait for is for a break of structure to confirm that the trend has changed to the direction we want. So we had our break here, our break of structure here, right? We had our break of structure here. So once we had our break of structure there, we had a second break of structure, so confirming that this trend has changed, right? Perfect. So now what do you look out for now? Entry models, right? We now look out for entry models. So what's our entry model? So you look out for either the type A type of entry, type B type of entry, or type C type of entry. So let's look at this guy. What do you have here? What do you have here? A sweep. What do you have here? Liquidity, structural liquidity. Boom. So now what do you expect? A sell, right? We are anticipating sales. So what else do you do now? You have notified our break here, right? You have notified, sorry, let me use this guy. And you have notified our liquidity point here, right? So what do? We go to the 15 minutes to look. So we are now looking for order block. Where is the order block market is going to react from now to give us that set, because all our criteria are already in place. Okay, let me remove this guy. We are done with that guy. So all our criteria are already in place. So what do? We are looking out for order block. So you now decide the type of order block you want to pick. So I'm seeing another block here already. Okay, so for me, I will pick this indication candle here. Look at this candle, this indication candle here. That's the guy I'm going for, right? So you pick that guy. Okay, I picked that guy. Yeah, let me change this to back to, what am I doing? To the color. So let's guy back, and okay, so that's our. So you can either you can also decide to switch time frames. Sorry, that's not what I wanted to do. So you can either decide to switch time frames to maybe go to the 30 minutes time frame. So remember, 30 minutes time frame is also part of our entry time frames, right? So 30 minutes time frame is also part of our entry time frames, right? So we can also look for order block on the 30 minutes time frame. And what can you see? That guy that I collected is also another block here. Are you seeing? Is it very clear? This one is very, very clear. So you pick that other block. And what do you expect for markets to come? And so we now place our order here. So our sell order here. And what can you see? Market. Okay, let's zoom in very well so that. What can you see? Market just came, tap into that guy, into that other block. I want to zoom it in very well so I can see the tap. Are you seeing the tap there? Tapped into that other block. So you know our rules now. You protect the high here because of spread. And where are you targeting? The overall low that is going to be taken out, which is this low here. So you are targeting there. And what did you see? Very, very simple. I see direction and patience. Like, okay, we are still going to be talking about a lot of things in other sections, right? Okay, I see. So after that guy was after this guy is done with what it was doing, what else do? You go back to the higher time frame. Right? You go back to the higher time frame. So at this point, you can now be using for 1 hour daily time frame and 4 hour time frame. So we have gotten our trade there. Okay, so we know that market is still going to the downside, right? So what do? You go back to the 4 hour time frame. Okay, so on the 5 hour time frame, what else are we expecting? We delete all of these guys are no more important to us. So we have gotten our break of structure, right? Now what do we want again? We have gotten our another break of structure here, okay, on the 4 hour break of structure, right? So we repeat the same process. What do? We mark out the high, mark out the low, which is this guy, okay. Mark out the low, okay. Remember this high here, has a strong high, so tendencies are that market is going to take out this high as inducement, right? Market is going to take out that high as inducement, okay. But then we don't know. So here we have another block here, right? So this guy is going to be our first entry here. We have another block there. The other block is very very obvious there. So we pick that other block there. So we anticipate markets to take out this high, okay. So we don't mark out this high again. We mark out this highest point, right? Wow, I made a mistake when it comes to this. Is this side that you are looking at? Sorry, this low that you are looking at that caused the break of structure. Sorry, it's not this low that you are looking at. This low, sorry, right? Because it was this guy that broke this structure, okay, and this low here. Are you getting it? So if you are marking out this your premium and discount zone, so you are expecting this high. Pardon the user. So if you are looking at your premium and discount zone, so this is where you are going to be expecting a change of so whatever. So you can either aggressively here or still look for confirmation on the lower time frame, right? That's good. So let's remove this guy. So for me, I can do two things here. I can also wait for markets to, right? I can also do the same process we did here. Okay, you can just mark out this side, but we are anticipating this side to come, so we are just going to be very very careful here. So what are we going to do? We are going to mark out that high and this low, right? Then use our premium and discount zone to know what we are doing better. So we want markets to, sorry, this is not I'm going to mark it. The markers from the high to the low, right? To the low. So what are we going to wait for? We are going to wait for a switch in direction, right, to start selling, right? So we go to the 1 hour time frame to see what the 1 hour is saying. So we've come to the 1 hour time frame, right? And look at what one beautiful thing that happened there. Okay, the 1 hour is not giving us that more details. We go to the 15 minutes, right? Remember, so you guys have our focus in mind. Right. So look at the 15 minutes time frame here. I want you to know why the premium and discount zone is very very important. What can you see here? Markets broke this guy, broke another structure, right? Broke another structure. Let's zoom in very well so I can see. Are you seeing that break of structure? Wait, let me. So watch this. Are you seeing a break there? Are you seeing that break? Right. So I've seen. So are you seeing that market broke double structure there, right? So what will you be anticipating? What will you be anticipating? And you have your sweep here, right? You had your sweep there. So what will you be looking at for other block, right? we have a very beautiful pin bar there. Sorry, we have a very beautiful pin bar here, right? So you are going to take that pin bar and wait for market to take it out, okay, and tap you in. So what can you see? Market did take it out, right? Market took out that liquidity, okay, and tapped into that other block, and look at what happened. What's going on here? Look at what happened. I want to show you guys something. Look at what happened there. Okay, so the market just gave you a reaction and then took out that high. I don't know if I see what I'm saying, but why do you think this thing happened? If you can see that market was still in a discount zone. Look at that. Are you seeing the market was still in a discount zone? Are you seeing it? It has not tapped into our into our premium zone. That's why this setup was not valid. It met all our criteria for, like, all our entry criteria, but it didn't meet our premium and discount rules. Okay, so our premium and discount rule is that market must come into a premium zone before we sell. I don't know if you're getting it. Market must come into a premium zone before we sell. So for the fact that market didn't tap into our premium zone, there is no sell for us. No matter how perfect the setup might look, no matter how perfect the entry setup might look, once it is not in a discount zone, in a premium zone for sales or in a discount zone for buys, you don't do anything. You just wait, right? You just wait. So as you can see, market just manipulated and then took you out, and then what can you see? It just went into the discount zone, into the premium zone, and start selling off without giving us anything to work with at this point. So it just did a massive sell off. I see. Your direction was right, your entry was right. What wasn't right? Your premium and discount zone. So are you seeing that everything here, we are now putting it all together? Everything is important, right? Everything is very, very important. So these guys just continue selling off. That means this high, these guys are likely no more going to be important to us again. So what do we do? So once market broke another structure, here, you move back to your higher time frame. So if you get your break of structure, you move back to your higher time frame. Let's delete this guy and this guy. These guys are no more important. So you move back to the higher time frame to get a clearer picture of what the market is doing. Boom, 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 boom. So let's delete this guy. This guy was not a value setup for us. So what can we see again here? Right, we have a high, which is this guy, a high, and a low, which is this guy. Okay, that broke. I've come again. So we got our break of structure. So what are we going to be waiting out for a low? But this was that Trump news, that tariff news. That was why there was a massive dump like this. So that was why this guy dumped like this without giving us anything to work with at that moment, right? So here was the low here. So the low was here, and before that it has broken a higher time frame. Like all this, whatever it is you are doing, you are going to be going to the higher time frame to get a clearer picture. So if you go back to the daily time frame, you will see that market has, that sell off has tapped into a discount zone, on the higher time frame. Watch, remember this is a strong low and this is a high. So if you mark out, remember the market is overall bullish, so we are just trading a reversal, we are just trading a pullback space, right? So if you watch this, what can you see? Market just sold back into a discount zone for the buys. Are you getting it? Into a discount zone for the buys. So now sales probability has now lessened. We are no more selling anything. Why? Because we are now in a discount zone for the buys in the higher time frame. Remember, the higher time frame will always control the lower time frame. I seen the buys for the higher time on the higher time frame here, right? So what are we now going to be doing? We are now going to wait for this same 1 hour, sorry, for this same 4 hour to switch to buys before we can do anything. Okay, so taking sales here might work, but it's now risky. Like, it's not a low probability setup. You are more like involving your luck in the game now. So once all this guy happened, not that you cannot trade. I'm not saying you cannot trade whatever it is that is happening here. Why? Because this guy corrected and is now selling off. Not that you cannot trade it, but are you seeing that once market entered the discount zone, are you seeing that it started being messy? But do you see what happened there where it was in a premium zone, how it was selling beautifully and nicely? But now it went into a discount zone. Are you seeing what it's now doing? It's now buys that are now working. Are you seeing is the rules are just simple. I see now is now buys that are now selling, that are now working. Like, buys are now holding, the lows are now holding, and the highs are being taken out. I see that here the sales probability became low and nothing to sell here. So for you to be on the safer side, you are always going to be going for the higher time frame to look for direction. Okay, if you don't get the direction of the higher time frame, or whenever you come to the market and the direction of the market is not clear to you, just stay out, right? You just stay out and just wait for markets to give you a better direction. So this was for this pullback. So it was only just one set that we caught on this pullback, right? So we are now waiting for more buy opportunities. So we are now waiting for more buy opportunities for the upper side of things, right? So the same rule applies. And you see how you got buys here and market is already, so we are waiting for another break of structure. So if you happen to get a break of structure here, if you get our new break of structure here, what are you going to do? Somebody, what are you going to do? Mark out your low and your high that was broken, right? Sorry, if you mark out your low, so you wait for markets to start pulling back, so you mark out the high. So wherever the high is going to be, you mark out the high and then wait for markets to pull back into your discount zone and start looking for entries to buy. Okay, either in the 1 hour or 15 minutes or 30 minutes, you start looking for buys, right? This is what you are going to be doing here. Very simple, very, very simple. So let's look at another leg in this case. So let's go back to weekly, right? So you can get a direction and then talk about it. So let's talk about this buy here. This, when markets pull back into this area and continued buying. Okay, so let's look into it. This buy, let's remove this guy. So we want to talk about this buy here, right? So on the weekly time frame, market pulled back, right, into a zone here, into something, and is now continuing going to the upside. So what do we do? We are waiting for markets to switch, right? So if you go to the daily time frame, you can get a bigger picture of what is happening. So on the daily time frame, what do you see that happened there? Market switched here, broke structure here. That was where market broke structure. I see it gave you the first break of structure there, gave you another one here. So automatically market is already bearish. If you even look at this guy, it has broken double high. Let's zoom closely so you see all the things that makes this change of trend very valid. Are you seeing it has broken another structure here? Are you seeing it has broken another structure here? So the market is now bullish. That means it is done pulling back to wherever it is that it is pulling back. It's now ready to go to the upside, right? So we go to the 4 hour. Boom, boom, boom. So we are now on the 4 hour time frame, right? Right. Okay. So this thing I showed you here, this break and this break happened on the daily time frame, right? But then, before then, look at what 4 hour did here. Boom, 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 boom. Okay. So before then, look at what 4 hour did here. So assuming when we were looking at this high, right, and this low, and this break of structure here. Okay, this break of structure here. When we are looking at that high, this high, and this low, okay, looking out for the pullback, right? What are we going to be doing? We are going to be expecting sell once market gets to, okay, from this high to this low, right? So once market gets to this point, we are going to look out for switch in trend, right, on the lower time frame to get the buys. So in this case, when market changes trend, like this is when you procure losses. Do you get losses? Like there are always room for losses, right? There are always rooms for losses. So once market did this, you are likely going to get likely going to take losses, right? So look at this guy using that same scenario here, using that same system. Once he got a break of structure, what are you expecting? A pullback, right? A pullback. So look at this pullback here. What did the market do? Look at this pullback here. What did the market do? Market broke structure double, like this the first side, this is second high. So market broke double structure here, which means that market is already has changed intention, right? So what else do you expect? What else are you seeing here? Another break of structure. Okay, so we have confirmed that market is now have changed trend, like it's done with the correction. It's now ready for pullback. I get it. It's now ready for pullback. So what are we now looking out for? Other block. I'm going to the 15 minutes now. It's going to wind us. So let's see this. Okay, this guy has a sweep. Sorry. So this guy has a sweep. So this made here a strong blow, right? It's made here a strong blow. Let me remove this guy so I can see this chart very well. So he made here a strong blow. What else are you seeing here? A structural liquidity, right? A structural liquidity. Are you getting it? So what can you do? I will take this QMR here. This week was another block that failed, right? So I will take this QMR here, and that's how you are going to take the trade. So what are you going to do? I see the system works like perfectly well. So market did us dirty here. So you are going to protect this low, right? So what did market do? Market just took us out. Then this so painful, man. So you are going to be targeting this high, right? This is the high you are going to be targeting. So that's your target. So market just took us out. But you see, the system is working perfectly well. Like I seen it. Boom, took us out and went to our direction. So when that happened, what else are you going to look out for? Okay, we are now looking for entries. Remember, sorry, what's happening now? Remember, remember remember we are selling. Oh, we are selling. So let's put back our premium and discount zone. Are you seeing? Once market was in the discount zone, buys was working perfectly okay until you get to a premium zone. You now wait for a change of trend to continue, was selling, to start selling. Sorry, are you getting it? Perfect. That is not happening. Okay, so since we are in a discount zone, what are we going to be looking out for? So we have gotten another break of structure, so we are going to be looking out for um inducement, right? So where is, sorry, we are going to be looking out for liquidity. So we have our sweep here. This was a structural liquidity that turned to a sweep. So we have our sweep, but we don't have any other liquidity here to validate this trade. So assuming this guy took out this high like this, sorry, so assuming this guy took out this high like this, so we have our other block here, this other block now. I see you could have had a second, you could have a second entry, but that high was not taken out. So we are going to be following rules here. Okay, so that second high was not taken out, so there is no trade for us. We just ignore it. There was no liquidity to be taken out, right? So we wait again. We've gotten another break of structure, right? We've gotten another break of structure. The same rule applies. What can you see here? A strong glow, right? A strong glow. Then what are you going to be looking at for? Liquidity. This is a structural liquidity. If you go to the 15 minutes, you will see it's clearer. So go to your chart, look at the 15 minutes. So this is a structural liquidity. Why? Because it was the last low before the main low. So which other block are we going to pick? You can either pick this QMR here, this week that failed, as the other block, right? If you also pick this candle as the other block, you can see the market also tapped it, right? So in this case, you are going to switch time frames to get a very clear other block that can suit these guys. Okay, let's go to the 15 minutes time frame and look for another block. So I will see those live examples and how it works, so it not be as if you are doing magic. Okay, the 15 minutes does not have a very clean order block, I guess. So are you seeing, if you take the 15 minutes don't have a very clean order block. So we can go to the 30 minutes time frame to see if we can get sorry what's wrong with my time frame? Right, so let's go to the 30 minutes time frame so you can see if you can see another block. I would have loved this other block here, but you could have missed this entry, right? I seen that liquidity that is very clear here. You could have missed that. You could have missed this entry. So that QMR was the best bet. I seen it. So depending on the other block you took, or depending on the other block you decided to take, it determine if you are going to be on that trade. So we took our QMR there and we had our entry. So we are going to be protecting this low. We are going to be protecting this low, right? And targeting that high. So we are going to be talking about risk management, right? We are going to be talking a lot about other concepts, right? So the same thing continues, right? So once market gets to your premium zone, you pump your brakes on the buys, right? No matter how tempting the buy setups might be looking, you just pump your brakes and wait for a change of trend, right? So here if you are following our rules, what do we have here? Okay, we had a break of structure there, and we had a break of structure because this is the lowest point before the break of structure, right? So we had our break of structure here. Let's zoom in very well. Are you seeing the break of structure? Look at that break. So following our rules, what can you see? We don't have a second break of structure, right? And we do not break double structure. We don't have a second break of structure and we not break double structure, like second break of structure, something like this, right? And we don't have double break of structure, whereby we don't have something like market just broke this guy, this low here. Market just broke this low. So assuming market broke this low, that means we have a double break of structure and we'll be looking out for trade at the upper side here. That means we have confirmed the change of trend on the higher time frame. Let me show you. That means we have confirmed the change of trend. You know that we are in a downtrend here, right? So assuming that guy happened, took out this low here, so we'll be looking out for sales. Why? Because we have confirmed the change of trend to continue this direction to the downside, right? But it did not happen. So what do? We stay out and just wait. We just wait and see what the market is about to do. So it happened to be that market used this guy as a sweep. Look at this guy. This was a structural liquidity that turned to a sweep, and now use this guy as the other block. Why? Because here now turned to an inducement. Here turned to an inducement and continue buying. Okay. So for us, this is a low probability setup, kind of a low probability setup. Why? Because we are expecting sales. Okay, we are expecting sales. Okay, right? We are expecting sales, and this happened. So market just turned totally bullish when what was happening to the chart? So market changed into bullish. Are you seeing? So we did not get any sign that market is going to go to the downside. It just continued breaking to the upside until it took out this high. Are you seeing how that rule saved us from a loss here? How those rules we have in place save us from the loss here, right? So assuming you just consider here as your break and say there is your inducement and wanted to buy from here, are you seeing? Boom, you take a loss. So I wanted to sell from here, just boom, you take a loss. So rules are here to guide us. What happened? We are offline. Okay, yeah. So back to the store. So rules are here to guide us to make informed decisions. If not, we'll be taking unnecessary losses, and that's not what we want, right? That's not what we want. We want to make informed decisions and then make the best out of whatever you have. So now let's talk about this. I'm already tired, a little bit tired. But then let's see if you can do. I see the same rule applies. Like this trading thing is very simple, like too simple. The same rules applies. The fact that this guy is already bullish, like already bullish, so you had a break of structure here, a very strong break of structure there, and here what do you expect? Market to pull back, change trend and continue going to the upside, right? Though we were expecting a bearish move here, but then market just did something crazy here. Just watch, market did what? Broke structure here, right? Broke structure there. What can you see? Market gave us a strong low here, a strong low here, gave us a very sweet inducement. See the inducement. Why? Because the inducement broke structure, right? It broke structure. And what do you have? Another block this week there. Let's zoom in so you can see the other block I took that week. I seen the week. So in this case you have two. What is just happening? So in this case you have two options, like two other blocks to buy from, right? You have this QMR here, so you have this other block here. Why do you have this other block here? Because you also have a sweep here. You also have a sweep here. Alright, you also have a sweep here. So, and this guy is a structural, it's not a structural liquidity. So this guy is a structural liquidity, right? To this zone, to this other block. So there are tendencies that market is going to take out this low, right? It's going to take out this guy, even though it was a strong low. Why? Because there is another liquidity here that market is coming from, right? That market is coming for, right? So the tendency that market could have taken out this strong low here and tap into this guy and continue. So in this case what you do is just take this guy, but then reduce your risk, like reduce your risk, right? Reduce your risk, then also wait for this guy in case this guy takes out, this guy takes out these guys as take this guy out as liquidity. So you can also have another entry here. Are you getting it? Are you getting it? So we are going to call it a night, and tomorrow we continue looking at entries and understanding more about this. Then we also talk about risk management and how to go about it, right? So thanks for tuning in, and see you guys next time, right? Have a good night. Bye bye.